No matter what markets you look at, all losing traders do the same things repeatedly that causes them to lose money over time. In this video, I am going to tell you the top 3 mistakes that losing traders keep making. Day trading is one of the most difficult endeavors anyone will experience. To be profitable in the long run, you must have a solid proven strategy and the emotional intelligence to be able to execute that strategy consistently. Unfortunately, most traders lose because of the same repeated mistakes. Over the years, I have perused the forums and various Discord channels and found that losing traders all fall into these negative behaviors. The first mistake losing traders make is trading with too much size. This is true even for the experienced traders. What usually happens with new traders is that they will go into any market and trade with a size that will result in complete blowout of their account in just a handful of losing trades. The most common reason for trading large size is that most traders would usually start trading with a small account. And because they are greedy to grow the account quickly, they will risk 5% or more of their account on a single trade. Few losses in a row, and they will usually hit a margin call. Experienced traders, on the other hand, would usually fall into revenge trading after series of losses. They would usually start out by following their trading risk management rules. But after losing a few trades and feeling frustrated, they would usually up the size to recover the losses quickly. This would usually lead to bigger losses and eventual blowout of their accounts. The second mistake losing traders make is disregarding the stop loss. Stop loss is one of the most covered topics in trading, but yet, most traders tend to violate this part of their trading plan when they face consecutive losses. Losing traders either trade with no stop loss, or they will keep moving their stop loss further away as losses mount. These actions show that losing traders want to avoid the psychological pain associated with losing money. Look, nobody enjoys losing money when trading, but it is a part of this business to be able to handle losses. Keeping losses at a minimum ensures that the trader can protect their capital and allows them to properly recover from drawdown periods. And finally, the mistake that most traders make is taking fixed target profits. Fixed target profits and letting your trades run for excessive profits are reason why traders keep losing money. I think the biggest contributor to this behavior is the same advice they would see in most trading education. Cut your losses and let your winners run. These traders who follow this age-old advice would typically set a fixed target for their trades, regardless of what the market is doing. They would obsess about the risk to reward ratio and would aim to have 3-to-1 or even more after each trade. What ends up happening is, they would see their trades turn into losses as markets turn around just shy of their profit targets. They are essentially forcing their analysis onto the market and not adapting to the market's volatility. Just remember, what will make money over time is not the risk to reward ratio. It is a combination of your trading wins and loss percentages, along with your average wins and losses, that will determine whether or not you will make money over time. As I have mentioned earlier, trading is very difficult. It's not just difficult from the technical sense, in that you have to build a solid strategy, but it is also difficult from the psychological perspective. Most mistakes that traders make are negative emotions getting the best of them. Losing some money on a few trades wouldn't necessarily kill your account. It is when you continue to press your luck after consecutive losses that would usually result in a blowout. The one advice I would give to struggling traders is, begin by trading small. I mean, really small. Anywhere from 0.25% to 0.5% of your account per trade is what I would recommend. The reason trading small size will help the most is because it prevents sudden and extreme losses that you cannot recover from. As you gain experience and show that you can consistently make money with small size, then you can increase the size over time. Remember, protecting your capital should be the #1 rule in trading. Without capital to trade with, it is game over. Anyway, that's the end of this video. I hope that I have helped you be aware of the common mistakes that losing traders make and able to improve your own trading. Regardless of what markets you trade, these common mistakes will lead to the same eventual blowout of your account if you continue to do them. If you enjoyed this video, please hit that like button and subscribe to this channel. Thanks for watching.